Good afternoon, ladies and gentlemen. The number 13 proved to be very unlucky for equity markets today. The Nifty tested its 200-day DMA, falling 324 points at 23,559. The Bank Nifty also was at its 200-day DMA, dropping about 1,100 points at 50,088. Both indices slipped sharply lower, and across the board, there was very heavy selling pressure. Look at how the small cap index lost 3%, mid cap index has down 2.6%, and many other indices, including the real estate index, was down about 3.5%. Reason is simple. Yesterday's inflation number at 6.1% has resulted in all hopes of a rate cut happening 2 months down the line by the Reserve Bank of India into oblivion. So that's a very big problem. And across the board, there was very heavy selling pressure on stocks such as HDFC Bank, ICICI Bank, Reliance Industries, some of the IT stocks such as Infosys and TCS, as well as also on Punjab PNB Housing, Bombay Stock Exchange. Despite a stellar set of numbers, ICICI Bank was down about 1%, SBI lost 1.7%, Suzlon was down 8.5%. As also stocks like Hero Motors down 4.2%, L&T, Maruti. In fact, if you look at the advanced decline on the Nifty, only 4 Nifty shares were in the green compared with 46 that lost ground. Overall, 235 shares on the National Stock Exchange ended in the green versus 2,132 that closed in the red. All 19 indices closed with losses, and some of them, as I have already pointed out, were fairly sharp. Now, what is the good news? It's the listing of Swiggy. A very warm and excellent listing that Swiggy had against this backdrop of intense selling pressure. The stock was sold at 390 rupees, listed at about 420. There was a bit of a breather in the first 5, 7, 10 minutes of trade when it touched about 395, 393. But from then on, sustained buying saw the stock close somewhere like 460, 459 rupees, which is an uptick of 17%. At the same time, the listing of ACME Solar wasn't as successful. The counter closed 12.4% lower at 253. So good news and bad news traveling together in the Dalal Street. But for the moment, it seems that we will now have a dead cat bounce. From tomorrow, the Nifty and the Bank Nifty will rise because of short covering. Remember, Thursday is the weekly expiry of the Nifty, and we've had 2 successive days of 300-point cuts. So those will be covered, and you will see a dead cat bounce still up somewhere like 23,700 or so, and then perhaps selling pressure will come back again on the Nifty. This is the right time to look at strong counters. This is the right time to again deploy some money in an extra SIP for the month of November. And this is what you need to practice. Buy fear when everybody is running helter and skelter. You have to be fearless when the market is full of fear. Ladies and gentlemen, we'll meet again tomorrow.